Okay, then let's get started. Hello and welcome to today's Cyber Resilience 202 webinar. My name is Cy West, Director Customer Engagement, and I will be the moderator for today's session. If you do have any questions, please put them in the Q&A and we will do our best to get through them all during the discussion phase at the end. So, Cyber Resilience 202, this is an extension of our flagship NCSC APMG accredited Cyber Resilience 101 course. If you haven't participated in the 101, then please reach out to a member of our team for further information. We can get you booked into one within your local region. For our 202 sessions, we like to bring in interesting, exciting people from the resilience team or from our partners. We do this to discuss the relevant topics of the day. These sessions are specifically tailored for our brokers, although the doors are open for all to join. And in this short, impactful session today, get ready to enhance your understanding of cyber risk and empower your brokerage with the right measures to protect your clients and stay ahead of the ever-evolving digital landscape. So today's topic is cyber insurance, a new paradigm for protection and security against adversarial risks, with our very own Rob Brown, Senior Director of Cyber Resilience. Welcome, Rob, and thank you for coming in to deliver the session today. Over to you.
Thank you, Cy, and welcome to everybody. I guess I should say good afternoon to you if you're joining us from Europe today. So a little introduction to myself. And while I put this up and you can sort of see my background, I'll just sort of briefly explain that, while my career contribution over the last, and I almost hesitate to say this, but nearly 3 decades, and you can tell by the excessive amount of gray hair that I now have, has been in the area of strategic value and risk quantification. But I joined Resilience in an effort to create a new market category of cyber risk management, which includes both cyber insurance risk transfer and a proactive collaborative risk management, but not only with its customer base, but also with the broader market of people that are consuming or thinking about the issues related to cybersecurity. So to that effort, I help evangelize the ideas of cyber resilience and cyber risk quantification. And I provide support and guidance to customers who want to understand for themselves how to quantify their cyber risk profile. With that in mind, I'll jump to the sort of the session description, which I think just about everybody should be familiar with this now, as you probably read it and responded to it. But as I leave this up here for you, what I'd like to do is maybe go beyond the what is it, what reason are we here for today, and really discuss really the why, at least initially. I want to tell you what my moral motivation is, if you will, my reason for existence for doing what we're doing here. So as I go through this conversation with you today, though, I want to ask that you begin thinking about how you can contribute to a safer world. A world that is more resilient to the various threats that abound today, with a contribution that goes beyond a sort of a traditional transactional broker activity. And I think we all know and understand that our lives today are highly integrated and hyper-connected through information systems, information that we transfer and store, that we process and transform for other uses, that we use to make predictions to support our plans and investments, and information that we use to control other systems. So we live a life today in a cyber world, and that cyber world has contributed immensely to an improving world, regardless of what you might think about social media, right? Today, we can accumulate and transfer wealth at a faster rate than has ever been seen in the world. And we accomplish that primarily through the way in which we systematically acquire, store, process, and communicate information. For example, we now store important legal, financial, and health records all in digital formats, when previously all we could use was paper and physical delivery and storage of that paper. We picked up paper and we moved it around with vehicles, and we stored it in physical filing systems and in warehouses of those filing systems. But now, in the information age, we have used software to replace hardware to a great extent. And one effect of that is that now one single device, I'm holding up my iPhone here, is sufficient to do what a dozen other devices were required, for 15 years ago. In this cyber age, we interact with each other remotely now with greater frequency. We can check in on the lives of our loved ones and our friends in a way that our grandparents couldn't understand. We can be present with each other in important moments. We can play, transact, check in, converse, conference, and overlap communication activities with other activities, all at a speed that no one ever dreamed possible until the advent of the information economy. This information economy, our cyber world, has opened up vast benefits for humankind that is entirely unprecedented. And yet, notwithstanding all this increasing wealth and embedded benefits, some people today are happy to be thieves, and others are happy to set the world on fire simply to watch it burn. Both are obviously corrosive activities in society. And I can say that anyone who has ever been a victim of cyber fraud or identity theft knows this firsthand. In my own personal experience, my personal information was stolen in the Federal Office of Personnel Management breach some years ago. If you recall from my little bio on the prior slide, I've done quite a lot of work for the U.S. federal government. And as a result of that, my personal information was stored in their systems. But not long thereafter that breach, my identity was compromised to take loans and to set up fraudulent bank accounts. So given this, even my own experience has not been the worst that others have endured, but I would say that repairing the situation was time-consuming, expensive, and vexing and anxiety-producing. And I don't know about you, and this is sort of getting to my main motivation here, but I am tired of this state of affairs. So I think we are in the place where we need to start making a lot of dynamic responsive changes for that. And I think what this has done is prepared a system where we need something like cyber insurance in this ecosystem of cyber risk management. So with that in mind, this is sort of where I'm presenting to you what I would like for you to think about today. But now is the time, I think, for brokers to be aware of what is available and why it's available in terms of cyber insurance. I want to sort of promote the idea that this will not be like traditional forms of insurance, like property and casualty, and that we will need something that is much more dynamic and responsive than what we have traditionally seen in other traditional types of insurance. We all have to think about this world differently and the role we play to thwart and suppress the corrosive behavior of cyber threats. And as we continue, again, my question for you today is, what can I do as a broker that goes beyond? So with that, I'm going to take myself off of video so that you can maybe focus more on the content rather than me waving my hands around and looking like I'm looking through my bifocals. And I'll lay the agenda up here. So initially, we will go through some recent events that have shown up in the news. These are going to be sort of equally balanced between US and the EU presence. Then we'll talk about some of the predicted trends that our own internal security experts are seeing for this remainder of this year and on into the upcoming year of 2025. I will briefly talk about some of the regulations and some of the standards that are evolving to help us in this whole effort. Then I'll talk a little briefly about the need for cyber insurance and how that structure of cyber insurance has to change in order for this to work correctly. Then, and finally, I'll talk about the pathway to resilience, primarily from the perspective, not so much from the broker, but from the point of view of the CISO, the Chief Information Security Officer in the organization that she serves. But bring it back around to ask, in the end, what can we do from the insurance side to support the broker? I'm sorry, to support the security professionals within the organizations that we are hopefully wanting to serve. So with that, let's talk about one of the recent big events that has occurred here in the United States. You're probably, even if you are in Europe, you've probably heard about this. Back in February of this year, the Alpha Black Cat ransomware gang gained access to UHG's and Optum's IT systems. Now, to give you a little idea, UHG is one of the largest medical records and medical transaction systems that operate within our medical system here in the US. It is so big that it actually really approximates a critical infrastructure type business. Although I don't necessarily always agree with the wording, but it is a kind of a business that we often describe as too big to fail. This company generally transacts about 15 billion medical activities a year. So this is sort of what happened. Ransomware was imposed on UHG, and the effect, the sort of the, if you will, the what the hell on the heels of what actually happened, is that ultimately about 8 terabytes of sensitive data were stolen, with $22 million ransomware demand placed on them. It took until April the 8th until all the systems were fully brought back online again. Now, most of the systems were actually brought online probably within 2 or 3 weeks, but the full system recovery didn't occur until April the 8th. In this period of time, this disrupted about $14 billion of medical claims, and it forced UHG to advance $2.5 billion of their own money to function as reimbursements that would have otherwise been transacted from other sources. The effect of this was that it severely hobbled many of the organizations that actually are within the UHG network. And as a result of this, multiple class action lawsuits have been filed. We also know now, according to Insurance Insider, that Change Healthcare did not actually have any standalone cyber coverage. And this attack resulted in United incurring a total of $872 million worth of impact in its Q1 earnings, with 593 of that in direct response cost and 279 million in business disruption costs. This was obviously a big event. Another recent event that you are probably familiar with, and if you actually happen to be traveling during this period of time, but in September of 2023, another variant of Alpha V, the scattered spider gang, gained access to MGM and Caesars resorts through social engineering and phishing efforts. And the effect of this was that millions of customers' personal information was stolen. Operations were disrupted across multiple locations throughout Las Vegas, and Caesars actually wound up paying about half of the $30 million ransom that was levied against them in this process. Now, we don't think that MGM ever paid a ransom, but MGM was the entity that was actually offline the longest and took the longest to recover. I will actually argue, whether or not it was ethically the right thing to do, but from an economic perspective, Caesars was probably already prepared for this event and knew that they would pay the ransom to get themselves back online as quickly as possible. So in some sense, I would actually say that Caesars was at least thinking about cyber resilience from their own perspective very early on. And I suspect that MGM was caught completely off guard. One of the other recent events that occurred in Europe, of course, was with, and I apologize if I mispronounce this to our Finnish attendees, but Tieto Evry, which is a a Finnish company, but it had a Swedish server that served a large amount of the Swedish infrastructure. They were also attacked by a ransomware group, Akira, which exploited the Cisco Adaptive Security Appliance and Firepower Threat Defense devices, which had not been actually updated from a vulnerability patch that was issued earlier in the prior year. Not too much earlier, though, just a few months prior. Nor were the devices in this particular case protected by multi-factor authentication. So the net effect on the Tieto Every system was that it disrupted the payroll for Tieto, approximately 5 different universities in Sweden, and 3 dozen government agencies. Uppsala County's regional patient medical system was offline, so this now goes into the health effects or the human safety effects. Munters, a financial consolidation system and part of the business systems, was affected. Unfortunately, ticket sales for Filmstaden were disrupted. And the agricultural and garden supplier, Grand Garden, closed approximately more than 100 retail outlets. So unfortunately, people weren't able to buy garden supplies on the weekend, maybe, but this obviously affected the employment and the operations and the financial stability of Grand Garden during this period of time. Another recent event, maybe a little bit older, but also involved a European entity, Securitas, which of course is a Swedish security company that's headquartered in Stockholm. In this particular case, an actual breach that we're aware of did not occur per se. However, let's say the Robin Hood kind of vigilante group, safety detectives, actually discovered that there was an unsecured Amazon Web Service server left open to public access. This particular web server contained a huge amount of security information. And the result of that was that it put at threat many of the airports in Colombia and Peru to exploitation, possibly by actual threat actors. But what was involved in this recognition of this open server was that there were approximately 1.5 million records or 3 terabytes of security information that was potentially exposed. And that specific information could have been used to basically blackmail or take advantage of security systems at these airports that Securitas was responsible for protecting. So obviously, the effects of cyber threats are real, and they can have just a massive impacts on the overall economy. So with this in mind, let's look at some of the trends that we've seen. So we've just took a brief look at some recent events, in the news. Of course, it doesn't take long in today's news cycle for recent events to become, obscure past events. Everything's changing on a daily basis, it seems. So with that in mind, and with the things that we see going on, let's think about some of the predicted trends that will be happening, that we see that will be happening. So the first is that we believe that adversaries will continue to leverage large language models to accelerate the time to ransom. Our cybersecurity experts predict that in 2024, this year, and for the remaining of this year, adversaries will continue to leverage these LLMs to accelerate social engineering tactics and time to ransomware attacks. According to a report by NordVPN, there has been an increased interest by potential criminal actors as the volumes of posts regarding ChatGPT and dark web forums increased by 145% in just the first month of 2023. Next, we see that attacks against identity providers will increase. According to CrowdStrike in 2023, 80% of cyber attacks leveraged identity-based techniques to compromise credentials. Their global threat report shows that the threat actors are doubling down on stolen credentials. with a 112% year-over-year increase since 2021 in advertisements for access broker services identified in the criminal underground. So this increase can be attributed to the expansion of cloud usage and remote work in most organizations today. And this increased digitization and volumes of online identities lead to an increase in identity-based attacks. Next, we are going to see privacy regulation increase across at least the US, and we are going to discuss some of the regulation that currently exists in Europe. But data privacy laws in the United States saw a massive expansion in 2023 as the US made efforts to establish something similar to the European Union's General Data Protection Regulations implementation of 2018. So working to pass the American Data Privacy and Protection Act, we've had 6 state legislatures implement data privacy laws in 2023 alone, and to help organizations manage regulatory challenges with compliance and operational and financial security risks. Next, we see that threat actors will continue to target third-party vendors to scale their attacks. These trends we've seen throughout 2023 will continue, and we potentially will see them ramp up as the success of these third-party vendor breaches fund cybersecurity activities. The third-party risk poses massive challenges to companies, particularly within the supply chain. And data from our own resilience mid-year 2023 mid-year claims report showed that the third-party breaches have become our top point of failure and cause of loss within our client base throughout the first half of 2023. My next slide is not advancing. Oh. Let me go back there. Sorry about that. The fifth thing that we predict will happen is that LockBit will remain the dominant ransomware game for a 4th consecutive year, although this may have been curtailed a bit by the recent FBI activity on this. But LockBit has been the dominant ransomware game for the past 3 years, and this we don't believe will change that much in 2024. Within our own client base here, LockBit has consistently ranked among the top 3 most active criminal groups. And according to the threat intelligence group Flashpoint, LockBit was responsible for nearly 28% of all known ransomware attacks from July 2022 through June 2023, and can be considered the most well-organized ransomware as a service group in the world. This group actually employs administrators, developers, and full cybercrime infrastructure that has helped them carry out approximately 1,700 attacks in the US and has earned around $91 million in extortion payments since they were first observed in 2020. The next thing that we see, there will continue to be an increased scrutiny for the Office of Foreign Assets and Control. In 2021, the U.S. Department of the Treasury's OFAC declared their opposition to ransomware victims making payments and issued an updated advisory on potential sanctions, risks for facilitating ransomware payments. The advisory is directed toward ransomware victims as well as financial institutions, cyber insurance firms, and incident response firms. And it defines OFAC's commitment to bringing enforcement actions in connection with payments that violate U.S. sanctions. Next, we see that state-backed threat actors will continue to leverage zero-day vulnerabilities. State-backed threat actors are enacting really sophisticated cyber attacks that target national security, and they are a growing threat. Conflicts like this recent war in Ukraine have spawned an uptick in cyber warfare, committing cyber attacks to push a political agenda or pervade war tactics against a nation. These attacks present a growing threat to national security, we believe, in targeting critical infrastructure such as information technology, education, think tanks, and more. Next, we see that data privacy violations arise from deployment of LLMs and SaaS products. So I've already mentioned the presence of the threat that maybe LLMs could pose. But now this is actually related to the use of LLM output into software as service products. These new AI capabilities, such as the large language models or LLMs within digital and SaaS products, are revolutionizing the way consumers interact with online protocols or online products rather. But however, in this rush to deploy the latest AI technology, concerns about adversarial attacks that could cause these models to share data inadvertently are being overlooked, we believe. LLMs, such as OpenAI's ChatGPT, have data retention policies that may not necessarily align with the data handling strategies upheld by organizations. LLMs rely on user data and sometimes share this data with third parties, creating a security gap between the language models and the organizations that use them. Next, we see that politically motivated disinformation campaigns created through the use of AI as continuing to increase. The creation of large language models again and AI has led to more convincing phishing messages and the use of these LLMs to push malicious agendas throughout 2024. Of course, as the US and the UK are both facing upcoming elections, the risk of politically motivated disinformation campaigns created through these AI systems is particularly alarming to us. The general ability of these models to manipulate and persuade to provide one-to-one interactive disinformation is a significant area of concern, says Sam Altman, who is the CEO of ChatGPT, the company that is responsible for unleashing a large number, or rather the large language model by that name. Number 10. We will see ransomware and business email compromise continue to gain prevalence. So 2023 was obviously a tumultuous year for the cybercriminal ransomware market. Our own mid-year claims report saw that while organizations are growing more resilient to making extortion payments, the total amount of requested per payment is growing, leading 2023 to be the most financially damaging year for ransomware since 2021. We also noted that in the attempt to achieve successful ransomware payments, sprawling third-party attacks and big game hunting began to trend. The threat actors are attempting to breach multiple systems at once to increase their likelihood of payment, and also are getting their sights on, or setting their sights on, larger organizations that may have more reserves to pay on extortion. According to a report by cybersecurity firm Abnormal, business email compromise increased by 55% in the first half of 2023. And actually, I can point out that business email compromise or wire fraud has probably become one of the largest sources of value loss to organizations in aggregate, although independently within each company, it still isn't nearly as large or as troublesome, of course, as ransomware, or as disrupting as ransomware. Our internal experts predict that each of these trends that I've just discussed here will continue throughout this year and into the next. The cybercriminal market relies heavily on extortion payments to fund its activities and is able to establish workarounds to security protocols rather quickly. In 2024, building resilience against ransomware and business email compromise will be a key component to managing cyber risk. So as we move through the remainder of the year, it is likely that the cyber landscape will evolve in ways that we never saw coming. However, given the data from key trends in the prior year and our own expert knowledge in tracking and translating cyber risk into actionable insight, this caution around these 10 predictions will be beneficial to us as we continue the year and look forward into the year 2025. So that's sort of an idea of where things have migrated toward, sort of the ongoing and increasing level of cyber threats that we're facing today. So let's move on from this now, and let's talk about some of the existing regulations and standards that are being implemented. At least here in the US, probably one of the most recent regulations that has been put into place is the new SEC cyber rule. And I'll put this first one up. The first thing that sort of comes out of this is that public companies must provide the required cybersecurity incident 8K disclosure within 4 business days after the company determines the incident to be material. Now, I want to pause here on this particular note on material and point out that the word material or materiality actually is mentioned 355 times in this regulation. And you see this repeated. Registrants must describe their process, if any, for the assessment, identification, and management of material risk from security threats. They must describe whether any risks from cybersecurity threats have materially affected or are reasonably likely to materially affect their business strategy, results of operations, or financial conditions. So what does materiality mean, though? And this is probably a big open question. Materiality means that an event would cause an investor to reassess current or future investments in a given company. So that exact definition of material is not given, not in precise numerical terms. And it seems largely up to each company to determine for itself. When asked about this, the SEC chairman, Gary Gensler, said, whether a company loses a factory in a fire or millions of files in a cybersecurity incident, it may be material to investors. Currently, many public companies provide cybersecurity disclosure to investors. I think companies and investors alike, however, would benefit if this disclosure were made in a more consistent, comparable, and decision-useful way. Through helping to ensure that companies disclose material cybersecurity information, today's rules will benefit investors, companies, and the markets connecting them. So the issue here is we are focusing on material risk, not material loss or reporting. And as I often tell our customers, the best way to avoid an 8K filing is to reduce the probability of needing to. And we're going to discuss a little bit about how to actually address that. In the European Commission, according to the Carnegie Endowment for International Peace, in recent years, Europe has put an intense focus on legislation concerning information and communication technology in cybersecurity for the European financial sector. With compliance being one of the main drivers for cyber resilience, a prudent and consistent regulatory strategy can help to ensure the necessary baseline in security across the financial sectors to mitigate these institutional and systemic risks. The current European regulatory landscape for ICT and cyber risk for the financial sector must be understood as multi-layered and complex. There does not exist one single major European cybersecurity legislation for the financial services sector, but rather a multitude of different European and national regulations and sector-specific standards. Financial institutions must adhere to critical infrastructure regulations, general European legislation surrounding topics like data protection, specific financial sector regulation and standards. These specific sector standards are further divided into the different subsectors of the financial sector, such as banking and payments, insurance and reinsurance, and financial infrastructures. Continuing from that, most European standards do not apply directly to all members of the states, but rather must be transposed into specific national legislation, creating further fragmentation and differences among the various European states. However, just to highlight a few of the existing regulations, of course, pretty much everybody is familiar with the Directive on Security, Network, and Information Systems, I think, now. The General Data Protection Regulation, or the GDPR of 2016, This GDPR was introduced to standardize data protection regulations across the EU and applies to all organizations that control or process personal data and operate within or sell goods to the EU. Finally, one of the key ones in the EU is the Digital Operational Resilience Act, or DORA, of 2020. This proposal was part of the digital finance package to further enable and support the potential of digital finance in terms of innovation and competition, while mitigating the risk arising from it. DORA aims to introduce a harmonized and comprehensive framework on digital operational resilience for European financial institutions, spelling out explicit requirements to address and mitigate ICT and cyber risks. It is a direct response to the joint advice by the European supervisory agencies. And then, in addition to what's going on in Europe, of course, just real briefly, I'll mention that the ICO and the UK's Information Commissioner's Office has also developed and is enforcing similar rules and regulations designed to protect consumer identity and private information. So, of course, the point behind the regulatory landscape discussion here is that even governments are deeply involved in helping to address our ability to remain resilient in the cybersecurity world, or actually the cyber world itself, so that we can continue to maintain all of the various benefits that we have developed in the information security or the information age. All right, so let's step ahead now and think about a non-regulatory group. I'll bring up and mention the National Association of Corporate Directors, which is not a public regulatory body. It's a private body, it's a private body that promotes ethics and standards within private organizations and attempts to ensure that corporate directors adhere to their fiduciary duty of care with the highest degree of integrity. I think even though this is non-regulatory, the NACD actually is promoting some very progressive ideas. One of the things that I'll point out is that they are really elevating the idea that cybersecurity management needs to be elevated to a level of strategic intent within an organization. So directors need to understand and approach cybersecurity as a strategic enterprise risk, not just an IT risk. Directors should understand the legal implications of cyber risks. Then boards should have access to cybersecurity expertise, and discussions about cyber risk management should be given regular and adequate time on board meeting agendas. Oh, I'm not sure this is, all right. Another fourth point they make is that directors should set the expectation that management will establish an enterprise-wide cyber risk management framework and reporting structure with adequate staffing and budget. Board management discussions about cyber risk should include identification and quantification of financial exposure to cyber risks, and which risks to accept, mitigate, and transfer, such as through insurance. So this will require recognizing that we are no longer just simply implementing IT programs because we have budget for it or because we can, but we are implementing programs, or we should be thinking about doing this, implementing programs that are in fact economically justified and that probably serve some sort of return on investment back to the organization that is implementing them. And 6, boards should encourage systemic resilience through collaboration with their industry and government peers, and encourage the same from their management teams. The key point is that cybersecurity needs to be elevated to a strategic level of concern in organizations beyond the typical subordinated position within an organization's IT budget. Furthermore, these decisions related to cybersecurity should be justified in a quantified manner, informed by multidisciplinary concerns, insights, and expertise. exactly the way you think of a strategically thinking and oriented effort. So with that, let's think about, well, how do we move into cyber resilience? To get there, of course, we'll need to talk a little bit about the need for cyber insurance and what's required for that. So let's sort of recall the history of how we actually developed insurance anyway. It actually was developed initially, or the ideas behind the concepts related to the assessment of risk, particularly actuarial risk, was developed by a gentleman named John Grant. John Grant is actually given credit as sort of being the first epidemiologist, as well as being sort of the first actuarial. His analysis in natural and political observations made upon the bills of mortality consisted of a compilation and an analysis of data from the bills of mortality. The bills of mortality were documents offering information about the births, deaths, and causes of death in London parishes, and it was printed and distributed weekly on Thursdays, in addition to an annual report released in December, started in 1592. Grant continued publishing his work after that. His first edition was in 1661, and he subsequently published 4 more as a member of the Royal Society. It was actually this particular analysis that allowed him, a commoner, to be introduced into the Royal Society because of this groundbreaking work. He was the first person to effectively create what amounted to actuarial tables from the casualties reported. Now, this is the thing that we are facing, though. If we will have a functioning and valuable risk transfer system associated with cyber insurance, we won't be able to use this type of system. And in fact, the reason we won't be able to use it is primarily for 2 reasons. Number one, we won't ever have the kind of data that exists in actuarial tables. Why is that? Because actuarial tables that we use for other traditional forms of insurance are largely, quote, stable. That is, those populations, they change, but they change probably rather slowly in comparison to history. This is not the case for cybersecurity. And the means by which threats actually turn into losses are constantly dynamically changing. So how we gain data, how we keep it, how we use that for making inferences about what we can cover is constantly in flux. So what we will need is, I think, a different kind of system. We'll have to think about the world in a different kind of way. So if we think about how our traditional insurance system is generally operated, it is a sort of a top-down, hierarchical, transactionally led and recovery-focused system. We have capacity providers who supply to insurers, who are represented by brokers, and ultimately brokers speak to the insured, usually, maybe primarily through a chief risk officer. In most cases, this is not obviously always true, but in most cases, communication between the levels of these various within the hierarchy don't really communicate with each other. So we tend to be divided in terms of how the flow of communication exists and occurs. What we are thinking and what we believe to be the case is that we need to have a much more integrated relationship led that is relationship focused and led by the desire to develop resilience, which means that we will have to bring all of these entities more or less into a closed loop system of almost near constant communication with each other. The fact of the matter is that there are a number of voices that are claiming that cybersecurity cannot be covered by insurance because the risk environment is not like that of property and casualty. We are essentially in a state of warfare. So we're facing an adversarial agent that learns and evolves. Their contribution to the risk surface, which I'll discuss in just a moment, actually leads to a constantly changing risk surface. We have to use principles that are actually promoted within modern warfare concepts, like the OODA loop that was promoted by Colonel John Boyd. And if you haven't actually read anything about Colonel John Boyd and what's called the OODA loop or the OODA loop, I recommend you look into that. But what we have to do is abandon ideas of defensive or offensive positioning and instead adopt attitudes that we are shaping the initiative ahead of and around the adversary. In the same way that adversaries are seeking to destroy our defenses, we must be planning on how to increase adversary friction while reducing our own internal friction to do business. And this is the only way we see how to move forward to satisfy the risk transfer needs in the market. So what does that mean? According to Jen Easterly, who is the Director of Cybersecurity and Infrastructure Security Agency in the US government, we must be given the broader implications for our national security, economic prosperity, and public safety, we must think differently. Probably quoting Steve Jobs, of course, in her mind a bit. In other words, we need a radical change in the way we think about the world around us. So how do we get there? So from this point forward, I'm going to sort of pick up the pace a little bit, but I just sort of want to introduce to you the ideas that a CISO must be thinking about now in this sort of new elevated role with a strategic perspective in place. So the primary and what that goal is that they should have from a strategic perspective is that the primary objective of cyber resilience is being resilient to material losses within limits. Within limits is going to be sort of the key part of this, but the other piece is understanding and identifying what our material losses can be. So we have to go from a sort of a maturity model that is largely standards-based, and we need to be thinking about a capability model that is largely dynamic, evolving, that is structured to the contextual business objectives that an organization may have, and one that is focused on reducing the impacts in a quantified manner that it would be facing from various threats. So there are 5 principles of cyber resilience that CISOs must keep in mind, we believe. The first is they should clarify the risk surface. What do we mean by that? Well, an organization's risk surface reveals the relationships between threats and losses. When mapped out and quantified, they represent a company's value at risk. When value at risk is compromised, it leads to material loss. And we need to clarify this risk surface to understand how value at risk is derived. Next, we need to learn how to tolerate losses within limits. In contrast to the traditional mindset of establishing security against all threats, achieving this requires a thorough understanding of an organization's value at risk. But tolerance must occur within tolerance limits, right? We can't tolerate, and we don't tolerate all losses, and we don't attempt to control for every possible loss. The next thing we have to do is seek capital efficiency. Spending needlessly on risks that have a low probability of causing a material loss takes capital away from important business opportunities. Not spending enough on security threatens the business with these outside losses and liability. We have to learn how to make a balanced trade-off, a balanced economic trade-off in order to achieve this level. Next, we have to incentivize cyber hygiene. What we mean by this is that good cyber hygiene is the emplacement of security controls that target material risks. It's also controls that meet accepted and expected industry standards, but with an eye to capital efficiency. Again, I want to emphasize the economic nature of this. They should be prioritized by return on controls or return on investment in the more general way of describing this. And finally, my advancement is not working very well. We must bridge silos. We must connect security and risk transfer operations, that is the insurance side of the house, with the operational side of the house, so that corporate functions work consistently to achieve the same objective. That is what we believe is the concept of cyber resilience. All of these things working together in an integrated way, we believe will actually help reduce the overall impact to organizations, but not just to organizations, but to society in general. Now, given the time frame, I'm actually going to just jump ahead through my remaining slides, and I'm not going to cover these. These get more into the specifics behind the return on controls. And if you would like to maybe see this, we can probably provide these slides in the end. So anyway, but this brings me to sort of the closing portion of this discussion today. In this last section, where we discussed the 5 principles of cyber resilience, we discussed how the insured's risk and security management team can implement these 5 principles of cyber resilience on their pathway to evolving resilience capability. But we need your help to close that circuit to make it whole. So as I close today, I would like to present to you a question. Typically, I think when many people close a presentation, they do so with a request for questions. I want to close by posing a question to you. How can you as a broker actively contribute to your client's cyber resilience? I actually don't know if there's a clearly precise answer to this question, but maybe it starts with asking, who do you have the right conversations with? And I'd like to point out that we would like to help with that as much as possible. So I will come back onto the screen here to say thank you for attending today. And obviously, if you do have any questions, I think we might have a little bit of time left for at least one. And if not, please feel free to submit questions to us via email, and we will do our best to get a response back to you as quickly as possible. So with that, Cy, I'll turn it over to you.
Yeah, thank you, Rob. We do have a couple of questions. We'll see how we get on with time. So the first one here is, what's the difference between cyber resilience and cybersecurity? Isn't resilience just a fancy term for incident response and recovery, with the emphasis on recovery? For example, having strong set of backups and being able to recover within a certain time period.
Oh, sure. So I think what you're describing in that latter piece really speaks more to the capability or standards approach to cybersecurity. When we talk about cyber resilience, we go beyond in our minds just simply thinking about what are the systems that need to be in place per se, and certainly not trying to address every possible threat or every possible vulnerability. We are also including in that the idea that we should be economically efficient with the way we spend our resources to implement these controls and systems that should help us to recover. Recovery is certainly important, but it's doing so in an economically efficient way so that we are using our funds and our resources as efficiently as possible.
Thank you, Rob. And I think we have time for one last question here. So yeah, as a broker, why should we care? What's the main benefits for a company to have strong resiliency?
Well, from a broker's perspective, of course, I mean, this opens up a new line of business for you, right? But from the point of view of how you operate within this sort of whole ecosystem, the benefit is that I think that it helps you to create a more of a trusted relationship with your customer, right? By having this, by being included in the overall loop, if you will, rather than just having maybe an annual transactional relationship that occurs or on-demand transactional relationship. By thinking about the overall dynamic system that we are involved in, I think this should encourage more opportunities for uh, conversations with customers, finding out what it is that not just what they need, but what sort of issues are they facing. Maybe those issues can be translated into new lines of business, certainly by expressing, concern about the business and their concerns. I mean, you're basically increasing sort of that trusted advisor role that people are looking for to help them understand how to navigate this incredibly complex system that we're in today. I
Yeah,
hope that kind of addresses that.
yeah, absolutely, Rob. I think we see it all the time where, resilience, the conversations around resilience tend to get stuck in the silo of security. And that just comes up time and time again. And I guess that's because, you go back to what it is, as a CISO, which is security, but actually it goes way beyond security.
Sure.
The business risk, as we all sort of know and preach today. So we are short coming to the end of the session now, as we're due to hit the time point. So I'd like to thank all of the audience for attending today. It's great to have you join the Cyber Resilience 202, and a big thank you to Rob. Thank you for delivering today's session. It's great to have you online with us all. Um,
Oh,
as I look forward, as I look forward, we have two upcoming Resilience 202 sessions. Keep an eye out for that. The topic's going to be on vulnerability management and AI policy. So thank you all for joining us today, and we look forward to seeing you all soon. Take care. Goodbye.
yes. Thank you all.